Mike unwittingly put his finger right on the issue we're about to debate, so I'll quote him and play devil's advocate. He says, even if earnings growth continues from here, the market is fully valued. So make the case that you think it's still not and can grow from here.
Yeah, Kelly, I mean, I don't think there's any doubt that the market is very expensive. But as we all know, timing valuation's a terrible timing indicator. And it's not like valuations are any more stretched than they've been over the last few years. So I think ultimately, when you start to see signs that earnings growth is rolling over, you got to start to worry about the valuations, because that tells you there's actually quite a bit of downside for certain areas of the market that are more richly valued. But for the time being, if you have, this stable sort of valuation perspective and earnings growth is broadening out and accelerating, I think that's a pretty supportive environment, which is kind of what you see. You might get some pullbacks, you might get some volatility, but there's still some strong support for markets.
Is earnings growth?
SuperMicro is a name that obviously ran up big time, since pulled back off that 1229 high. What have you been thinking about this one?
Been waiting and looking for a place to buy it. Now, certainly, I'm not one to chase anything on the way up and the way down. So now we finally got some nice support there at that 100-day moving average. And so I'm looking at that. It held it for 2 days, and then and now today it's looking pretty good. So I like the upside there.
SuperMicro Computer, a leader in high-performance computing systems, recently unveiled new rack-scale liquid-cooled solutions designed for AI and high-performance computing workloads. The new systems incorporate the latest GPU, CPU, and networking accelerators to deliver maximum performance for convergent AI and HPC applications. This is great news for SMCI stock investors. The company's commitment to innovating new technologies is making it stand out amidst its peers, and this could result in more new investors getting into this great but under-the-radar company. In today's video, we're going to go over SuperMicro's new innovation, and we'll also walk you through the company's growth prospects and whether the stock price can hit $1,200 again or not, so you can decide if this stock is worth your hard-earned money. But before we do that, if you want to keep up with SuperMicro Computer's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Let's talk SMCI. You want to do that because I think this is such an important stock. We see so few like them to have such extraordinary momentum in price action within a year to get a 10-bagger. Obviously we're a little spoiled from some of the manic trading experiences of the COVID era, but this is, has been so stellar and rarefied that it's fun to watch. So the first pop indeed rallies us, but it's starting to fade down a little bit. I'm watching 900 pretty closely as an old kind of head and shoulders neckline. And yeah, we got to 950, but now we're back down to 850. Looking at their outlook, I think, firstly, because folks were looking for new guidance from them, fourth quarter adjusted EPS 762 to 842. Street was expecting much lower at around $7. So their profitability for the fourth quarter looks pretty good here as one outlook. In terms of sales expectations for that next quarter, 4Q, 5.1 to 5.5 billion, way ahead of the estimate at 4.7. From a growth outlook perspective, obviously that's good. What else is here, KG? What am I missing?
Well, from the estimates that I see, it looks like they missed the top line. I have revenue coming in for this quarter at 3.85 billion. I have the estimate right now sitting at 4.08 billion. So if you have something different than what I have, it looks like they did miss on the top line, but they did have the adjusted earnings per share actually come in better than the street's expectations.
Yes. Trailing quarter, trailing 3Q, they did come up a little bit shy by like 10 million.
Okay.
In the fiscal third quarter of 2024, SuperMicro's revenue rose an astounding 200% year-over-year to $3.85 billion, and guidance was also strong, with management expecting between $5.1 billion and $5.5 billion in revenue for fiscal T4, representing 133% to 152% growth. But the problem is that the market was expecting that level of growth, so the stock didn't skyrocket following earnings. it actually fell more than 10%. For this reason, SuperMicro Computer needs to keep developing and implementing new technologies, as this is the sustainable way to grow in today's market. So, the company's new liquid cooling systems unlock limitless possibilities, and one major benefit of them is that they're great for AI computing. By directly cooling CPUs and GPUs, they can pack extreme performance in a compact and efficient design, and this means that data scientists can leverage vast AI computing resources without the infrastructure headaches. But it gets even better. Liquid cooling slices data center power use by up to 40%. The servers also maximize chip performance at lower voltages, saving a lot of money. In turn, these savings can be reinvested to expand AI initiatives and drive even more transformative capabilities. In an AI arms race where compute is king, SuperMicro empowers organizations to stay ahead of the curve, offering customized liquid cooling designs tailored specifically to clients' workloads and data center requirements. But that doesn't mean this is a flawless system. In fact, there's a few disadvantages to it, and we're going to find out what they are now. Hello everyone, and welcome back to Investocracy. While liquid cooling can enable significant gains in data center efficiency and compute density, integrating this technology into older data centers can be very difficult, as it could potentially require extensive and costly cabinet redesigns. This reduces flexibility for future upgrades or changes. Additionally, more conservative IT departments may also harbor concerns about potential leaks and perceptions of reliability when mixing liquids with electronics. So SuperMicro needs to carefully weigh these factors and showcase the pros and cons very clearly to its customers so they can explore a transition to liquid-cooled infrastructure. Now, let's talk about whether this new technology will have an impact on SMCI stock or not. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with SuperMicro Computer. That said, back to the video.
I welcome back Alex Coffey and Kevin Green, guys. Nvidia, 9 days out. Not a lot of individual names are going to move the market, right? You're seeing the macro move the market and earnings move individual names. Nvidia, in 9 days, May 22nd, will probably move the entire market, guys. I'll go to Alex Coffey first. Alex, your thoughts. We're 9 days out. The stock is moving significantly just about every day. It's up about 1% today. What are you seeing?
Well, first off, you were saying it's probably going to move the market on its earnings. I'd make the argument that it moves the market every single day. At this point, it's trading at about a 60% implied volatility, and you're talking about a multi-trillion-dollar company. So few names, actually, I don't think any name has really ever done what NVIDIA is doing right now in terms of its impact on the market, simply because most names that amass that kind of market cap don't trade with volatility 4 times that of the overall market. So you had that with Tesla for a little while when it was crossing that trillion-dollar mark a few years ago, when it would always trade at a pretty hefty implied volatility premium. But Nvidia's way bigger than Tesla ever got, and it's just as volatile. So it's as important to this market right now as arguably any name at any point in any market cycle.
Nvidia is set to report earnings on May 22nd, and just like how SuperMicro dipping after its earnings caused Nvidia to dip, Nvidia falling after earnings could hurt SuperMicro, but SMCI stock could also see a boost if Nvidia stock rises on earnings. This is because the two companies are close partners, as SuperMicro's offerings depend on Nvidia chips. This means that SuperMicro is poised to ride the AI wave to new heights, but this epic journey may encounter some choppy waters along the way. SMCI stock peaked at $1,200 in March, and now it's trading at $782, meaning that in order to go back to these levels, SMCI stock needs to jump 54%. And of course, this won't happen overnight, even if the company has a lot of potential. The data center market is expected to advance at a compound annual growth rate of 10.5% over the next 6 years, reaching $622.4 billion by 2030. So this is a market that is continually growing, which benefits SuperMicro Computer as the company offers solutions to data centers, including the new liquid cooling one. In a recent research note, KeyBank capital market analyst Tom Blakely made some eye-opening estimates about SuperMicro Computer's growth potential, saying that the company has about 6% of the server infrastructure market, including an estimated 10% share of the AI server segment. That's already a decent portion of a market where the products are in high demand. Yet this could just be the first chapter of a much bigger story, as Blakely believes that SuperMicro Computer's AI position can surge to 23% of the market this year. If that's the case, then it's easy to see the company's market capitalization expanding rapidly in 2025, 2026, and so on. With this in mind, is it time to buy the dip on SMCI stock? As the demand for AI computing power accelerates, SuperMicro benefits. But the biggest issue with SuperMicro Computer is that its current trading levels don't align with management's long-term goals, which are to achieve $25 billion in annual revenue. In the fiscal third quarter, SuperMicro posted a profit margin of 10%, so if it could maintain that profitability level and hit its revenue goal, it would produce $2.5 billion in profits. SuperMicro currently has a market cap of $48 billion market cap, so the stock would trade around 19 times earnings if all those projections were true. Now, this might be expensive to some investors, but that doesn't mean SuperMicro will struggle as a company because massive AI demand will continue to boost its revenues. Considering how companies are now just starting to monetize AI technologies and the expectations for data center growth, SMCI stock offers an attractive risk and reward profile for investors with a multi-year investment horizon at its current valuation. The recent dip saw short-term traders existing, but long-term shareholders who look past short-term issues and keep perspective on AI adoption trends underpinning growth should see upside. But what do you think? What are your expectations for SuperMicro Computer? Let us know your thoughts in the comment section. If you would like to know more latest updates about companies like SuperMicro and what it's been up to, then go ahead and click on the next video on your screen. See you there.